Hello everyone and welcome to my morning report analysis videos on Tuesday 16th of October with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly sort of stable outlook really to markets today. It's interesting that we've started to see these markets settle down a bit after the significant sort of fears that we saw last week, which saw equity markets selling sharply lower. You've seen as a degree of stabilisation. The S&P 500 was quite nicely up on Friday, but just dropped back a bit today. But again, sort of the futures are basically about 0.3% higher, 0.4% higher now. So it's helping to stabilise sentiment in Europe. We've got that where DAX, CAC, FTSE is a little bit lower, but DAX and CAC are higher. And we're seeing this sort of stabilisation to a degree. The yen starting to just drop back a touch again, which is the yen has been the strengthening currency of the moment, certainly against the dollar anyway. And that's been a feature thereby where the yen has started to weaken a touch, but I'll go through the implications of that in a bit. Interesting that gold is still hanging on to its gains, sort of broadly stable. Oil is dropping back a touch, suggesting again, Iranian supplies are an issue there potentially, but it still seems as though oil is looking to stabilise after a recent corrective move anyway. And what we have is sterling being the outperformer of the day. Now that comes ahead of an important couple of days actually. We've got a cabinet meeting today for Brexit and then the EU summit tomorrow. So the fact that sterling is strengthening on the back of that is helpful. But also what we have had is UK earnings growth, which is ticking better than expected, 2.7% on the total consideration earnings growth, and 3.1% on an ex-bonus basis. So both higher than expected, both suggesting decent stability for sterling there. So that's a good number for the UK economy, good number for sterling, helping to outperform today. But again, as I said, these meetings in cabinet and then tomorrow at the EU summit will prove, I think, significantly volatile potentially in the next couple of days, and it needs to be watched. You may have also seen there on the data points as the Chinese inflation up the top, ticking a very slight above expectations, although sort of keep an eye on this PPI back to 3.6 from 4.1. That suggests that economic activity continues to be affected by the US trade sanctions. The trade tariffs and trade dispute, but CPI in line with expected there. So not a great deal of direction from that China data, but certainly the UK data interesting as well. Not only that, look at this. German ZEW minus 24.7. That's a 3-month low, and a pretty significant deterioration from what we had seen a couple of months of improvement there. And what we've now had is the euro dropping back. It was sort of 10-15 pips up. It's now sort of lost about 20 pips on the back of that data. So that's interesting as well. Now, economic data to account for today: US industrial production and capacity utilization, sort of 0.2 and 78.2. So very sort of marginal pickup on month-on-month activity. Capacity utilization ticking 0.1% higher to 78.2. NAHB again in line at 67, Jolts at 6.95, which is a shade higher from 6.94 last month. So my chart today is the US dollar Canadian dollar. Now I find this one a very interesting chart because what we've seen in the last 3 or 4 months is this downtrend channel. We've seen consistent rallies within the downtrend channel, just falling over and subsequently falling over to move to lower lows. So lower highs, lower lows. And there is obviously within that this rally that we've seen in the last sort of week or so, couple of weeks, but that rally is beginning to roll over again. You can see that coming through on the MACD lines, fading underneath neutral, the RSI back below 50, the stochastics giving a crossover signal. It's similar sort of move to the one that we saw in September and also August, where we see these sort of unwinding moves, and the stochastics give your sell signal the cross and then you fall away again. We've seen a move back below the psychological 130 figure level, and it now means that last week's low at 129.20 is the near-term key support. If that gets broken, I think you're going to be looking at 128 figure, 127.80 being that October low. So I think that that's going to be where we're at. So you've seen that the market's just drifted off on the hourly chart as well. You're trading underneath all the moving averages, which have been supportive throughout the rally. So the fact that you're trading underneath all those moving averages that are now beginning to turn lower, again sort of reflects the fact that we're starting to see a more corrective outlook. But certainly if it moves below 29.20, then I think that that is your signal, or decisive signal for a correction and a retracement to 28 figure, 27.80. Key resistance 130.70. Yesterday's high 130.50 being a lower high. So I wish you good luck in your trading today, and I'll speak to you later.